Welcome to a new segment that we're adding to the Investigation Game podcast called Be a Data Sleuth. Whenever we drop in these segments, I'm going to give you practical tips, techniques we can stop talking, start doing in our businesses as a fraud examiner, as a concerned citizen, as someone who's maybe just perpetually paranoid about fraud. This segment is for you. So let's get started. For my first time hosting this segment on the podcast, I thought I'd start with something that maybe you've heard about in the news. We're going to talk about Michael Mann, my Payroll HR, and just everything that happened, what it led to, and how we can prevent that going forward. I first heard about this on September 11th via email from Krebs on Security. And if you don't follow Brian Krebs on Twitter or aren't signed up for his emails, I highly recommend that you do, because he definitely is watching for these types of events and reports on them real quickly. And I really like his detail. So I've read his article, I read some other articles, and I've kind of pieced together what happened. So, and I'd like to try to explain it on this podcast. So my Payroll HR was Michael Mann's payroll processing company, and the direct deposits that you receive from your employer go through a series of processes. So I'm going to try to draw this. I'm not very good. I'm not an artist at all. So bear with me, but hopefully it'll help explain. My Payroll HR handled the customer interface to handle payroll processing, and it received deposits from employers to cover the employee payroll. They then would send the employer deposits that were going to cover payroll and a data file instructing how each payment was to be paid to employees through a processing company named Cachet Financial Services. The payroll deposits that they had collected from all the businesses or their clients, the employers, are then sent to a holding account for Cachet to cover the amounts deposited to employee bank accounts. However, a couple weeks ago, instead of the employer's payroll deposits going to the holding account at Cachet, they were diverted and sent to a bank account at Pioneer Savings Bank that was controlled by Michael Mann, the owner of my Payroll HR. Reports say this was around $26 million. What's terrible about all of this is that when Cachet realized the funds weren't in the holding account, they reversed the employees' deposits. But there was an error in the reversal instructions. So they tried to cancel the reversal and send it out again correctly. But some of the banks let both reversals through, which not only backed out the employees' checks for the week, but also took out a second amount as well. And of course, as you can imagine, this second withdrawal overdrew some employees' accounts. Cachet was not the only processor affiliated with my Payroll HR to sustain losses. There was another company out of Florida that would pay in the quarterly payroll taxes on behalf of my Payroll HR's customers. And this company had about $9 million in tax payments that they made on behalf of my Payroll HR. And then they went to go collect that money to debit my Payroll HR's bank accounts when they found out that the accounts were frozen. After reading that the bank accounts were frozen, I immediately thought, this is a bigger fraud scheme than stealing, not that this is acceptable, but than stealing some payroll from people. This is part of something much bigger, and definitely sounded like a robbing Peter to pay Paul type scenario. Then on September 23rd, I read that federal prosecutors had filed a complaint charging Michael Mann with $70 million in bank fraud. And according to the different articles I read, which will be in the show notes, is that the different articles said that he had fraudulently obtained about $70 million in loans by representing that he had receivables and assets that didn't actually exist. So, and in recent months, he had been check kiting as well, which if you want to know about check kiting and Ponzi schemes, check out our episode with Janetta Maxwell. But the buzz we've seen on the news about all the payroll issues and the hundreds of thousands of employees not getting paid on time, all just this huge mess, was really a last-ditch effort and the end of fraud schemes that had been happening since at least 2010. And a pyramid scheme or a Ponzi scheme or any other scheme that's funded or, founded on robbing Peter to pay Paul, it always has to look for new sources of funding, a new way to create more of a float. You have to find another funding source. They all come to an end. And in this case, it affected hundreds of thousands of employees. And actually, I did read where Cache, the payroll processing provider, ended up paying all of the employees, and now they're the ones potentially stuck with that 26 million or whatever the count is now loss. In the Wall Street Journal article that I read, Michael Mann was apparently using all of this diverted payroll money to offset outstanding loans that he owed that he fraudulently obtained from Pioneer Bank. I mean, especially in the age of social media, what did he think was going to happen? People apparently went to Twitter immediately when all of their deposits weren't going through, which, if I were guessing, is probably why Krebs on Security picked up on it so fast, because he's watching those sorts of things. But anyway, he's now been charged with bank fraud, and we're not here to talk about why he did something, his psychology, the behavior, blah. Let's talk about what can we do. I love recommending payroll outsourcing to small businesses as a prevention method against employee theft. So what are we going to do if the person handling that outsourcing of payroll is a Michael Mann? And, if we think about it, payroll outsourcing is still run by people. So we can't just turn a blind eye. We can't just assume they're going to do everything the right way. And something that I hadn't really considered before now is that payroll companies aren't highly regulated, although I'm sure that's about to change. But anyway, nevertheless, I'm here to offer the following safeguards. 1, don't give your payroll outsourcing company access to your operating account. That's just one more person to have a bank account number, and why give them access to all of your funds? Create a payroll account, transfer the money over, let them debit that account. I know it's an extra step, but I would rather have them have access to the funds I've set aside for payroll and not my entire operating account. And number 2, ask your payroll provider if they are insured to cover against instances like this. In just a second, we're going to check in with an insurance expert so that he can tell us all the things to ask our payroll provider about. And number 3, a payroll provider is a vendor. And just like you would do due diligence on a vendor that you don't know very well, do due diligence on your payroll provider. Just a couple of ideas. Look at reviews online. Research the company. Look to see who actually owns the company. Look for bankruptcies that individual or that company might have filed. That's just a place to start. So when I see stories like this in the news, I often try to think about, as a data sleuth, as a fraud examiner, as a private investigator, how do I take very practical steps to reducing my risk, preventing and detecting fraud? All right, as I mentioned earlier, I have invited an insurance expert to the podcast today to talk a little bit about just some different options, or the option that we have as consumers to help us reduce some of our risk or exposure should another Michael Mann situation happen with a payroll company. So I have asked Tim Driskill. He is the CEO of Insurica Tulsa. I've known Tim as long as I've been in business. I think Insurica has been helping me this entire time.
Thank you. I think so.
Yeah. As we were talking earlier, you were talking about how you actually went to undergrad at OSU and got a degree in finance and insurance. So that was a combined...
Pretty rare.
Yeah.
Pretty rare degree.
And started in the insurance industry when you were about 14 years old. So
working for my dad.
Yeah, so you've been doing this for over 50 years.
I have.
So I feel like that you qualify as an expert. If we were in court right now, they'd say, yep, you're an expert.
I didn't bring my briefcase with me.
Well, that might be a strike against you.
Might disqualify me.
Yeah. I wanted to, the other day I reached out to you about this Michael Mann case, and I said, what can we do to help mitigate this risk? And you said, give me a second, we're looking into this. And so then sent me the sample policy And I didn't know what I was looking at, so I invited you to come over and talk to me about it.
Okay, that's
and our
great.
listeners. So we'll kind of talk about what options are out there as a business owner. What can I do to help to protect myself?
From those situations, and it's difficult because a lot of agents aren't going to be aware of a solution for that problem, and so it may not come up in the conversation. And so from a risk management standpoint, unless your agent is bringing those risks to your attention, you're the one that needs to be thinking of them.
Yeah.
And if you're thinking about it, you're giving your money to somebody else, and so it's not like they stole it from you. You just gave it to them.
Yeah.
And if you were looking at it from the standpoint of your own company, you're thinking, well, I've got coverage because I buy employee dishonesty coverage to protect my company in the event I have an employee who steals from me.
Yep.
And that is what most of those policies, in fact, do, is cover just that, theft by an employee from the employer. And so that's not going to help you much if you're giving your money to a third party and their employee is the one that steals the money that's your money.
Right.
So your employee dishonesty policy isn't going to protect you. So you're trying to figure out, well, how do I know that I've got some protection in that regard, because I'm going to pass my money on to somebody else like that, a payroll service. So looking at them, one option to check is to see if they have a bond in place that it covers theft, but not theft of their money, theft of their customers' money.
Sure. Okay.
And so that's possible, although I'm going to say most of them probably don't. What you're then looking at is trying to figure out, can you buy employee dishonesty coverage that extends third-party coverage somewhere else? And so trying to figure out, does the payroll service have a bond, or do they have employee dishonesty coverage that extends coverage to a third party? So you want to know they have employee dishonesty coverage, and that's fine, but it would only cover stealing money from payroll company, and it's your money, so you need to know that it extends or is endorsed to pick up third-party coverage.
As a client, I would be that third party that their employee dishonesty policy would extend
to you.
That's what we want to ask.
Yes, and then they could give you a certificate that shows that.
Okay.
So you would know it, just like you're asking them for a certificate of some other kind of insurance, workers' comp, or maybe professional liability, and you're just asking for one more thing, employee dishonesty, but not just employee dishonesty with third-party extension or a third-party endorsement.
And they can give me, as a client, a certificate showing me that.
They should be able to do that.
Okay.
Yep.
Well, that seems easy enough.
If they have the coverage, have the coverage. And a lot of them don't. They really don't.
Yeah. Well, they might be looking into it now after this case.
People might be more sensitive to it.
Yeah.
So, that kind of company, staffing companies, where you get into that situation where a staffing company has an employee working for somebody else, a third party. That third party wants to know, well, what about the staffing company employee stealing something from me while they're working at my premises?
Right.
Same kind of an issue there. Your employee dishonesty coverage isn't going to help because that's not your employee.
Right.
But their employee dishonesty coverage would help if it has that third party extension to go to protect you in a staffing company situation. So you've got those two things come to mind, boom, as places where you have those kind of issues and problems.
Well, I think after all of this, and we were kind of talking about before we started recording this, how this case could literally just shut some payroll companies down. If he was in business with them, or even like Cachet that went ahead and paid, all the employees' payrolls, and they're stuck now with this $26 million loss is what I read. Yep. So if that is true, that could shut a company down.
It very easily could. And in these cases, in particular this case, the payroll company is not going to be able to step up and probably have funds to pay the taxes or the payroll that disappeared. Right. You're going to have to do that as the employer. And if you look at it, you think, well, they're going to have coverage for that under their employee dishonesty. Well, Probably not at all, in particular in that case, because
Mm-hmm.
the owner was the person that perpetrated the fraud, and
Right.
that's an exclusion on every policy. And so they're probably not going to have the funds to reimburse their customers.
Right.
In the short run, that's going to make it back on the employer to pick those up.
Yeah. When we were talking earlier, though, about this extension to third parties, you were saying that the cost isn't exorbitant to add this.
It really isn't. If you, in the scheme of things, if you buy employee dishonesty coverage, and if you're buying it now, just look at your cost paying for that in your own business. It's not very expensive. You can buy hundreds of thousands of dollars of coverage for thousands of dollars in premiums.
Mm-hmm.
Not extensive, not very expensive.
Yeah.
And all you're asking them to do is extend that to a third party. Well, that's
Right.
a nominal cost to endorse it to do that.
Okay. So hopefully our payroll fees don't go up a ton. Now, if it gets regulated, the
That-
payroll industry gets regulated, now we're going to be paying
Now
a
a
lot
different
more for
problem.
payroll processing,
Now you got a
right?
different
Oh, gosh.
problem.
Michael Mann, what were you thinking?
Now a totally different problem.
Right.
Yeah, absolutely. But no, it's not expensive. It
That's
really
good.
isn't. You think it might be. The other day we had a customer that we were looking at maybe $400,000 worth of coverage for. And it
For
was,
employee dishonesty?
For employee dishonesty, it was under $2,000
Oh,
a year.
yeah,
So
yeah.
it's not, you're not like you might think, oh my gosh, it's going to be 50,000 or
Right.
20,000 or whatever. It's not.
right. Cool.
And so
Well, that's doable. And as the customer, I'm a customer of, like, I outsource payroll in my company. And so as a customer, the cost to me is just making that phone call and getting that certificate of insurance,
Right.
and then doing
right.
like a little bit of research about the company and who owns that company, and just like we would any
Anybody
vendor.
else. Always, I know that's your advice, always know who you're doing business with.
Right,
If
right.
you can, that makes a big difference.
Well, Tim, thanks
Okay.
so much for joining me today
Yeah.
on the podcast and
Enjoyed
helping
it.
us know how to mitigate some of our risk as a payroll client.
Yeah, kind of fun and different, something
Yeah.
to look into and pay attention
Right.
to. Pay attention.
Absolutely. Thanks
Okay.
so much.
You bet. Thanks.
Thanks for listening to today's episode. To get updates on future podcast events and resources, please subscribe to our podcast, our YouTube channel, and follow us on LinkedIn, Facebook, Twitter, and Instagram.